Hey y'all, Lisa Davis here, Trusted Banker. I'm going live on YouTube because we got some stuff to talk about. It looks like the Republicans have not stopped, and right now I'm going to read to you a letter that they submitted to the acting chair of the FDIC. And the reason this is important is because Republicans, and what I've read and discerned from the guidance that they're asking for from the FDIC, we are going to start seeing people's bank accounts being closed. And not only are we going to start seeing bank accounts being closed, but they're justifying why they need to be closed. And also, the Republicans are asking for leniency in the regulations as far as holding banks accountable. So let's take a deep dive into what they're actually suggesting. Here's the letter. Here is the letter to the acting chairman. Why can't I get this to come out? Okay, let me download the letter and then we'll look at it through PDF. I'm on YouTube. I do my long form content on YouTube. So if you guys are following me here and you want to see the document, I don't know how to show it on TikTok. So I'm going to pull it up on YouTube and go through it because we need to go through this because this is the beginning of this is how they're going to begin weakening the FDIC. And this is also how they're going, in my opinion, I believe this is how they are going to make a case for why unbankable people need to now use fintech services. And remember, fintech does not protect your money. And let me get a little backstory. So I am really a former banker of 25 years, right? And so what I do know as a former banker, my job was in regulatory compliance, but I started as a lender. So I do understand lending. I understand all sides of lending, tax credit lending, commercial lending, small business lending, residential lending, nonprofit lending. However, I finished as director over compliance, regulatory compliance, meaning that I also looked at how the regulations impacted the work that I had to manage at the bank. And sometimes I would be a part of the lending compliance team to see that part too, but I was over more community reinvestment compliance. But my concern here is knowing that I were understanding community reinvestment and why it was created. It was created because when banks were created off of the backs of slaves, our blood, our work, our tears, they were created for wealthy people, right? Stick with me. So banks were created for wealthy people that were borrowing money to buy more slaves in order to do their crops. As industry grew, as the country grew, as wealth grew, as capitalism grew, banks grew. As banks grew, banks catered to wealthy people. As banks continued to cater to wealthy people, slaves were eventually freed. The poor white people that had jobs had money, but these people couldn't not become banked, right? So low income people couldn't be banked. And if you can't be banked, and now you got to finance things like a house as we move forward into the 19th century to like 1950, 1960, you can't do those things if you can't get a loan, and you can't get a loan if you can't get an account at a bank. And so banks were then regulated by governance, by laws, by legislation, by Congress to make sure that they cater to all income levels, right? All income levels. Rich people and low income people should be able to open a bank account, period. You should be able to open a bank account. Now, the problem with that is, like in the days leading up into when I left the bank, banks are all about fee income, and banks are very transactional. So what does that mean? That means that banks don't necessarily make money on the finance charges that they charge on credit cards, car loans, and mortgage loans like we think, right? Banks make money on fee income. Fee income is transactional. Fee income is charging you a late fee, charging you an overdraft fee, charging you an application fee, charging you an annual fee. This is how they make money. Who gets charged mostly fees? People that don't have no money. Low income people miss their payments. Low income people have high rate interest credit cards, and so sometimes they go over the limit. When they go over the limit, they get charged a fee. Low income people overdraw their accounts. Low income people pay overdraft fees. Low income pay their bills late fees. All these things, right? Fee income. Now, rich people do pay fees, but they pay lending fees. They pay origination fees, wire fees. they pay fees to transact business. Low income people pay fees as a punishment. It's just what it is, right? And so now the Republicans have submitted a letter to the acting chairman of the FDIC, and we're going to read this letter. Let me find out how to pull it up over here. So, because this is important, and y'all asked me to keep y'all up to date with how the FDIC is going to be dismantled and how, how banking and things are going to be changed. And to me, this is diabolical. This is just devious. So the Republicans that you guys voted into office have now submitted a letter to the acting FDIC chairman. Can y'all see this? Do I need to make it bigger? I don't know how to make it. How do people make it? Oh, let me see if I can make it bigger. And so we're going to go through the letter. So this was submitted February 20th. Let me see if that came up bigger over here. It's not bigger. How do I make it bigger so y'all can see it? Well, it's public record. The letter was just submitted, but let me just read through it because I don't know how to make it big enough. So they're writing. This says, "Dear Acting Chairman Hill, February 20th from the United States House of Representatives." They're writing to say we are writing to better understand the plan for the FDIC regulatory supervisory work related to the digital asset activities of regulated financial institution. Again, remember, I keep telling you guys, beware of this digital currency and digital assets and fintech coming up. They're pushing for this. We want to thank you for releasing documents related to the FDIC. This action shows your commitment to transparency and accountability for the corporation, and we hope we can work together to provide clarity regarding the issue. So on Thursday, February 6th, the subcommittee on Oversight and Investigations of the House Committee of Financial Services held a hearing entitled Operation Choke Point 2.0, the Biden administration to put crypto in crosshairs. Now understand, if you guys know why crypto was created by the people for the people, first off. So crypto is governed by people. Crypto is created by people. Crypto is managed by people. Crypto was created. It's a resistance effort. Crypto is really it's an advocacy effort. It's a resistance effort to say, if you guys won't help us build currency, like access currency, access banking, we will build our own currency. We will manage our own currency. We will govern our own currency, and we will make sure that our currency is safe, which is why it's encrypted and it's on blockchain, and we will manage it. The people will manage it. We don't want governance around this. The people can manage it themselves because it's the people for the people by the people, and it's a global effort to have a global currency created and managed by the people. And the damn United States of America has not been very active in this space because they want to take it over like every fucking thing else that they like to do. And so they haven't been active in it. When I say that, it's been around for 20 years. They haven't been active in it. We don't hear government talking about it. They can't tax it, right? They can't charge us on it, right? They can't fee income us. They can't finance it, right? And so this letter comes across as if they're mad that Biden didn't try to do more in order to infiltrate this system and this market and this industry. So here come the Republicans, and they say, we are now concerned that if we do not make necessary changes for future administrations will continue to operate under the choke point playbook under the supervisory process to debank favorite industries. Crypto don't have nothing to do with that, but let's just get to what they're asking. To that end, we write to request your consideration of the following recommendations. Please provide information regarding the FDIC's next steps and which actions the FDIC could take now without action by Congress. They want written public guidance, require all banking supervisory guidance to be written, ending informal verbal only directives. This is a problem. Because a lot of time, let's go through the 5 of them and then I'll tie them all together why that can be a problem. Okay, the second one is concrete rationale for account closures, respecting Bank Secrecy Act requirements, explore ways for financial institutions to provide a clear explanation to customers when closing their accounts to ensure accountability. This is a problem. And the reason this is putting a light bulb in my head because I just did a workshop this weekend, and it was a senior, and she told me that they just closed her account with no reason, right? And I do know banks will close your account and they have to give a reason. Banks close accounts all the time. However, this is a low income senior, and they just closed that person's account. And so what the Republicans are saying is, we don't want to follow current regulatory guidelines. We want the permission for banks to be able to close people's accounts, and they're calling it unbanking. So they have now an initiative. It's not formal. I haven't seen a formal initiative in writing about this, but the language is unbanking. This is a term now. It's a term in banking. And so the Republicans are asking to get approval for banks to unbank customers without having to provide in writing. I mean, without having to have verbal conversations and things, and not having to have verbal directives from overhead. They want to just issue a letter in the mail. We all know how those letter in the mails work. They never are clear. They don't have a lot of information. Next thing you'll know, your account will be getting closed. This third thing they want to do is eliminate reputational risk. In our industry as a bank, reputational risk is a huge factor that can shut a bank down. It could shut a bank down. It could prohibit a bank from growth. It could prohibit a bank from earning more capital, more deposits. And what they're saying, number 3, they want to eliminate the terminology reputational risk. It says prohibit use of reputational risk as a supervisory factor and clarify and reform the use of management from that assessment to prevent abuse or discrimination. I don't understand how white people all of a sudden they feel like they have been discriminated against. Reputational risk is a huge way that we were able to fight when banks were not treating communities or groups of people correct, because it affected their reputation. And reputational risk is a big factor in that. And they're asking, instead of calling it reputational risk, call it management risk. From the management from Campbell's assessment to prevent abuse or discrimination. The fourth thing they're asking for is balancing test for regulations. Subject all supervisory guidance to an internal periodic review that weighs regulatory benefits against impacts on law-abiding American banking access. Law-abiding Americans banking access. Let me read that again. They want a balancing test for regulations. Subject all supervisory guidance to an external periodic review that weighs regulatory benefits against impacts on law-abiding Americans' banking access. The fact that they put law-abiding in here, every word means something in compliance, and the fact that we've never had the law be a part of any banking regulation. So that is very interesting. Subject all supervisory guidance to external periodic review that weighs regulatory benefits against impacts on law-abiding Americans' banking access. And remember, there are many reasons moving forward that people are not going to be law-abiding based on some of the executive orders that this administration has signed recently. It's against the law to be woke, and it's against the law. That's interesting. And number 5, they want the uniform application. Ensure all supervisory guidance and rules apply equally to all institutions, barring preferential or punitive case-by-case treatment. This is going to impact minority-held banks, right? All banks don't have the same supervisory guidance. All banks are not at the same level, and all banks don't do the same things, so it can't be all supervisory. So while we understand that there is a need for congressional action to help clarify regulations surrounding digital assets, we hope that you look at these recommendations and implement them appropriately. It's interesting why they are thinking about why they say that this has something to do with digital assets while they're talking about how they're going to be able to unbank certain people. Why they don't, and they want to protect themselves. See, they want to protect themselves. This is how I am. This is how I am defining all of this that they have written. They're trying to protect themselves and protect the banks from any type of action from the public, meaning that the public can't complain, so the banks can't be fined. The public can't say, hey, you're treating me unfairly, or the public can't go after the reputation of this bank by talking about this bank, or even if you do talk about the reputation of the bank in our supervisory guidance of regulations, reputational risk will now be removed. So therefore, if the bank gets examined, they won't be looking at the risk aspect of reputational risk. So therefore, they won't get downgraded for that, because reputational risk is a big factor, right? Subject to all supervisory guidance and external. So they want to unbank people, which to me means low income people, because they don't unbank millions. They unbank people that don't have a lot of money in the bank or don't have a lot of transactions. Why do they do that? Because they make money on transactions, and banks have found that it costs them too much money to hold an account open that's not being utilized. What do I mean? If you have a credit card that has a balance that doesn't have a balance, and you're just holding on to it and you're not using it, but you're just keeping it, they can shut that down because it's not being used. Therefore, they're not making any money on it. If you have a bank account or a checking account or a savings account or whatever, that you're not doing transactions, you're not withdrawing, and you're not depositing, you're not debiting, nothing, right? They can close those accounts for whatever reason, and they only have to issue a letter, written guidance that says they only have to give you they have to only give you written disclosure to that, instead of maybe talking to you about it or taking directives from others, ending in formal verbal only directives. And that's the problem, because some people need their bank accounts open. If they don't have a bank account, what this says to me is it's going to force unbanked people to start using things like fintech companies. And remember, this whole thing is around making sure that these banks and their partners, when we talk like affiliate, like people, like their friends that open up companies, they're opening up fintech companies. Fintech companies are financial technology servicing companies, which hold money, but don't protect the money with any insurance. And there's no regulatory requirements around that, meaning that this is just the wild, wild west of financial industry, right? It's the wild, wild west of financial institutions. Like it's not even an institution, but fintech is the wild, wild west. There's no oversight, there's no regulation. So if you start to close out, if you're asking for approval to close people's banks and unbank them officially within the regulation by sending out a letter and acknowledging that's just what happened. And then you're also asking, please protect us by not letting reputational risk be an issue that banks will feel or be deemed inappropriate on, because people might complain, because people are going to complain, right? And then also they're asking that they look at making sure that the regulatory benefits impacts all law-abiding citizens. And the law has never had anything to do with being able to access banking products and services. So think about how they're making it hard to vote. Think about it was something else with the Postal Service. I can't remember, but they're making it hard to vote. They're making it hard for women who got married to vote because their last names, like my last name does not match my birth certificate, so I got to go get a name change in order to vote, right? And so they're saying here, subject all supervisory guidance to an external periodic review that weighs regulatory benefits against impacts on law-abiding American banking access. Law-abiding is going to mean something. I have to find it, or it's coming up, but there's going to be some kind of executive order this man is going to sign that's going to have something to do. I got to read Project 2025. So there's going to be something about that, because the only people that, even people coming out of jail, even felons, once they get their social security number, can get an account. So there's nobody that can't right now, there's no one that can't get an account right now. Now they're bringing the law into it. If there's going to be ways for them to identify people that are not law abiding, because we don't pull your records. We don't pull your felony records. We don't pull records like that. This is very interesting, and it's not very fair. So anyways, Yeah, and then the last one, ensure all supervisory guidance and rules apply equally to all institutions, barring preferential and punitive case-by-case treatment. That, what? There's not any preferential treatment. However, there are different products for different income levels and different experience levels. Some people don't have a lot of experience in banking. Some people don't have a lot of experience in moving cash. Some people don't have a lot of experience in making a lot of cash. So I don't really get that, but different size banks have different size products. They don't all have the same supervisory guidance because they're all under different regulators, either the OCC, FDIC, or the Federal Reserve, and based on their size. So I don't understand why they said that. While we understand that there's still a need. So let me look at, will this also apply to credit unions? Oh, wait, he also wrote an executive order. Hey, Lily. Hey, so there is an executive order that was signed when the executive order he signed last week just got rid of the oversight advisory committee for credit unions. So we got to see. I don't know. Not yet. I don't know. Financial institutions have different regulations than credit unions. However, it could be the same. I just don't know credit union regulations because I didn't work there. But let's look at what the ABA said. The ABA is the American Bankers Association. And then if something comes up though, I'll let you know. But here's the thing. This is a crazy time we're in. So there's nothing that's going to be safe. He doesn't like anything. So it's at this point, I really need people to wrap their mind around the fact that he doesn't have preferential treatment for credit unions than he does for banks. The saving factor might be that because credit unions are owned by the members, and they're funded by the members, their advisor, their protections and things, not the insurance for the monies. That's by an insurance company. But because it's a member organization and members manage it, and credit unions fund other things through their members. However, if you pay fees or whatever, because I'm a member of a credit union, but I don't pay annual fees. So they have a little bit different. They have a little bit different of the way they manage their organization. But he's looking for things because he just wrote an executive order to disassemble the advisory council for the Federal Advisory Council for credit unions. So it looks like what they're trying to do is weaken these organizations in order to, then I don't know what else. This is irritating to me. Let me look up, let me show you guys, which one was it? This one. Okay. So this is the letter from the ABA, and this is where they break it down just a little bit more. So the letter was put in by Chairman French Hill from Arkansas, Dan Muser from Pennsylvania, Andy Barr from Kentucky, and Brian Steele from Wisconsin. And they are alleging that Biden administration, right? So the way they broke it down in this letter here is to require banking supervisory guidance to be written and publicly disclosed with limited redactions in the informal verbal directives. Respecting Bank Secrecy Act requirements, explore ways for financial institutions to provide clear explanations to customers when closing their accounts to ensure accountability. It's not going to be clear. It's going to be written, and it's just going to be, they don't want to have, and prohibit the use of reputational risk as a supervisory factor and clarify the reform. Subject supervisory guidance to an external periodic review that weighs regulatory benefits against the effects on law-abiding customers, banking access, and ensure all supervisory guidance and rules apply equally. It's not making me feel too cool about what they're trying to do. We're going to keep watching it, but I wanted you guys to know that is in the acts. So, yeah. They're not trying to steal your money. No, they're not trying to. They're not trying to steal your money. They are trying to limit who can utilize banking products and services, and then it's about making money. So they're not going to steal it. What they're going to do is they're going to make it like you got to go to like Chime, and Chime charges fees, and Chime probably pulls in more transactional fees than something like a Chase Bank, right? So the bankable people, the people that have money that they can keep their accounts. But if they determine that for whatever reason they're going to close your account, they'll close your account, but they might send you a suggestion as well. Hey, check out Chime, or hey, check out, I don't know any other online fintech banks, right? Or something like a Stash or something. I don't know. I don't know. Cash App might come up with a bank, So, so it's not that they're going to steal your money. They're just going to put people suggest that. I don't even know. This is me thinking this through, because I just did this workshop and so many people were telling me they just got their accounts closed and they didn't know why. And typically we don't back in the day, we didn't unbank people. We didn't do unbanking of accounts. We might have closed down your line on your HELOC. We might have shut that down after so much time, right? But we just didn't kick you out of a checking and savings account if it was, but everything costs money now. So as we have been moving forward in the times, because they know how much it costs, so they say, to keep an account open and have maintenance on it, managing and all those things, they do try to close accounts that aren't generating any income for them, no transactions and things. So they're not trying to steal your money. They are going to try to cut their costs, and they're going to probably suggest you go to other things, which is a concern. Unregulated, yeah. They're moving to crypto and regulated and unregulated facilities. Isn't that crazy? Because Chris, wasn't crypto created by the people for the people? Well, yeah. So they are definitely moving into crypto. So that's what I got right now. I was reading it, so I wanted to read it, so yeah, we could read it together. So I didn't want to read it too much before I got online, but I'm gonna keep reading all my updates because I haven't been reading my updates in the last 3 days. So let me get back to that. But I can see, yep. Hey, I encourage my family to withdraw funds and keep it under lock and key. Yes, I do not trust this administration. I don't either. I honestly believe we do need to invest in metals. Is it metals, gold, platinum, silver? I think we need to invest in things, right? Not all your money can be kept at home. Not all your money can be out the bank, right? Fees do whittle away one's accounts, yes. And I can definitely see Bank of America, Wells Fargo, Chase. I wouldn't be at those kind of banks right now. But this was submitted because of community bankers as well. So community bankers right now are doing something that I got to go finish that up as well. Korea got hacked. Crypto got hacked by North Korea hackers. I haven't looked at my crypto today. Okay. So yeah. So that's this update. Let me get off of here, and if I see anything else, I will let y'all know. All right. My name is Lisa Davis. I will trust the banker, and I'll talk to y'all later. All right. Bye, Lily. I'll talk to you next time.